I think the best stock to buy right now is Uber. In fact, I was so bullish on Uber stock that I bought shares for myself a few weeks ago. So in this video, I'm going to highlight several reasons why I think Uber is the best stock to buy right now, including sharing with you my proprietary discounted cash flow valuation of Uber, which calculates a fair value for the business. I'll share with you the forward price to earnings ratio, and I'll talk about the biggest risk Uber faces, which is driverless car technology. I'll do all that in this short video, so let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the reasons why I really like Uber stock is because of the valuation. So valuation, if you haven't already read my book, is one of the 6 steps in my 6-step framework for evaluating stocks. And valuation is the most important of those 6 things I look at when I look at a business. The greatest business in the world could make a poor investment if the price is too expensive. Thankfully, that's not the case with Uber. It's actually significantly undervalued according to my calculations. So when I did my DCF on Uber, I found its intrinsic value to be $112 a share. The current market price is only $81 a share. So it looks undervalued according to this calculation. Now, Uber has performed really well year to date in 2025. And to start the year, I mentioned that Uber was my favorite stock and I thought it was the best stock to buy. And I'm happy to see that it's up over 28%, while the S&P 500 is up only 5%. So those of you that were viewers of my channel to start 2025 and you benefited from that recommendation, I'm happy to hear it. But I think there's more room to run here for Uber, especially because of this valuation. And even when I go to finchat.io and I look at the forward price to earnings of 33, it looks undervalued according to the historical forward PE ratio for Uber, but also according to the metrics, right? Cash flow from operations are increasing significantly. Monthly active users are growing and they've surpassed over 150 million. The opportunity is absolutely massive here for the ride-sharing segment and the food delivery segment, which Uber is growing in both segments significantly. Now, of course, one of the biggest risks Uber stock investors face is driverless car technology, and most notably from Tesla, because driverless car technology companies like Waymo are partnering with Uber. They see the benefits of partnering with Uber because Uber already has all that customer data. It would be so expensive for a company like Alphabet to try and attract the customers that Uber has already attracted. And so by partnering with Uber, Alphabet reduces a lot of its marketing expense by partnering with Uber. But Tesla has stated that it's not going to do that. It wants to acquire its own customers, offer their customers Tesla vehicles, and have a fully integrated business without partnering with Uber or any other rideshare providers. And that threatens Uber's business longer term, because if Tesla is actually successful in developing its driverless car technology and developing it in the fashion that they're trying to develop it in, then it could hurt Uber's business meaningfully in the long run. Now, I'm talking in the very long run here. I don't think Tesla's going to have driverless cars on the road, broadly speaking, anytime soon. And so I think Uber's business is safe for a couple of years at the very least. Plus, Uber's partnering with the companies like Waymo, and others are likely to partner with Uber, and it can gain market penetration in the driverless car market, even if Tesla does succeed in developing its driverless car technology, which Tesla has been saying it's 1 year away since 2016, right? So if you listen to Tesla's promises, I think you'll be wildly mistaken, because they've overpromised and underdelivered for so many years now on so many different product categories, not just driverless car technology, but their actual electric vehicles. They say they're going to develop a $25,000 model. They develop a $40,000 model, right? So they're rarely ever hitting the targets that they set out to hit. And so I think Uber stock investors can discount those risks a little bit, not completely, right? You can't completely discard those risks because those risks are present. There is a chance, there is a non-zero probability that Tesla succeeds and captures, let's say, 80% of the market in driverless car tech, right? There is a non-zero probability, but I don't think that probability goes above 10%. I think it's somewhere between 0 and 10% as it is right now. Of course, as further developments progress, you can evaluate those progresses and change your assumptions based on those product enhancements that we see out of Tesla. But we haven't seen anything that's likely to threaten Uber's business, anything in the next couple of years. Furthermore, the driverless car technology that Uber partners with can boost Uber's business longer term because one of the biggest costs for Uber is paying drivers, right? It doesn't actually count that as a cost because it takes away from the total bookings and then it subtracts the amount paid to drivers and then it counts that as revenue. And so the company does pay, drivers do take a percentage of the overall spending that happens on Uber's platform. And so if Uber licenses and uses driverless car technology, then those dollars that are going to drivers out of total bookings can be reduced substantially. And so it could be a huge positive for Uber over the long term as well. So it doesn't have to be a negative, but most market participants, the price of Uber's stock is pricing driverless car technology as if it's for sure going to be a negative. And I've been arguing that it could be a negative, but it can also be a positive because of the drivers that Uber has to pay out of the total bookings that is spent by customers on the platform. So it has the upside as well as the downside. And I think the upside and downside are about the expected value is, I would say, in the middle there. It's so uncertain. There's so much disparity. There's so much range of the negative it can be and the positive it can be. It's hard to pinpoint. And so at its current level, I think Uber's attractive option for investors that are realistic about driverless car technology and are not completely convinced that Tesla's going to develop this technology and take 80-90% of the market, and that coming at Uber's expense. So for all those reasons, I think Uber is still the best stock to buy right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.